The ledger accounts illustrated previously appeared as T accounts with a debit on the left and the credit on the right. The T account clearly separates debits from credits and is used for teaching where there is not much detail. The official ledger uses this 4-column account for each account within the ledger. The first pair of debit-credit columns is for transaction amounts posted to the account from the journal, such as a $20,000 debit and the $9,000 credit. The second pair of amount columns shows the balance of the account as of each date. For this reason, the 4-column account format is used in practice, whereas the T account is used when learning accounting and when trying to analyze difficult transactions on a piece of scratch paper. Notice after the first transaction, cash has a $20,000 balance, and the most recent balance, as of April 6, is $4,000. So My Accounting Lab does not do a good job of showing how to post from a journal to the official 4-column ledger. So we're going to do this in PowerPoint to illustrate it, and in the project we will get some hands-on practice posting from the journal to this official 4-column ledger. So here is a picture of the ledger for this company. Notice they have 2 accounts in their ledger. They have cash and prepaid insurance. This is just a partial view of their ledger. They have lots of other accounts such as liabilities and equity and revenues and expenses. So notice cash has a previous balance of $5,900 before we're about to do a journal transaction. And notice cash has the account number 11. We also have an account called prepaid insurance, and it's account 15. Notice there is no balance in prepaid insurance. We're about to do a transaction that affects both of these accounts. So the process of accounting is, number 1, you enter a transaction in the journal, and then later you post the debit and credit to the ledger to get the updated account balances. So we're going to journalize this transaction, and then we will post to the ledger, which we saw on the previous slide. So on December 1st, XYZ company paid a premium of $2,400 for a comprehensive insurance policy covering 2 years. So the first thing we do is we need the date. 2005, December 1st. Now we need to figure out what our debit account is. So what are we getting out of this transaction? We are getting 2 years of prepaid insurance. On the day that we buy this, on December 1st, is it used up? No, it's not going to be used up totally until 2 years has passed. So this has a future value and is therefore an asset. And what is that asset called? Prepaid insurance. So prepaid insurance is going up, and since it's an asset, assets go up with a debit. So prepaid insurance is going up, and if on my slides, if you ever see this A+, that's just a learning technique, and it's reminding you that prepaid insurance is an asset. The A stands for asset, and the plus is reminding you that the account is going up. So prepaid insurance is going up by $2,400. And how did we pay for this? Did we buy this on account, or did we pay cash? And the other account, of course, is cash going down by $2,400. And cash, which is an asset, goes down with the credit, so that's why we are crediting this. And then we have some sort of explanation, paid premium on 2-year policy. All right, so now what we need to do is we need to figure out, well, how much is our balance of our prepaid insurance in the ledger, and how much is the balance of cash in our ledger. Now remember, this is the journal. The journal does not have balance columns, so to calculate balances, we have to post this information to the ledger. So the way you post is you're going to post the debit first and then the credit. So the journal entry is up at the top of the slide, and on the bottom of the slide, we're looking at just the prepaid insurance portion of the ledger. And so what we're going to do is we're going to take the prepaid insurance. Well, first of all, make sure that we're looking at the correct account. Notice we're starting with prepaid insurance because that's the debit. And so we're looking at the prepaid insurance part of the ledger. So the first step is you're going to put the date from the journal into the ledger. And then the next step is you're going to take the $2,400 debit and post it in the first debit column. Don't put it under the balance, not yet. We have to put it in the first debit column first. So we're going to put $2,400 there. And now what we need to do is update our balance. So notice on the balance row, there was no prior balance, so that means we had 0 before. So we had 0 before, and we're debiting this asset by $2,400, which means our new balance is $2,400. So cool, we now have a balance of our prepaid insurance. Now what we need to do next is in this post reference column, we need to put the location of where the $2,400 debit came from. And the way we do that is we find the page number of the journal, and we're going to put J2 under the post reference column. The J means it came from the journal, and the 2 means it came from page 2. Now, why do we do that? Because it could be months later and you might be troubleshooting an accounting problem and you might be wondering, well, where did this $2,400 debit come from? And now you know. For example, you might be looking at the ledger and say, there's $2,400 of prepaid insurance. I wonder how many months that was for. Well, you would have to go back to the journal page 2 and see that it's for 2 years. And we're almost done posting the debit. So the next thing we need to do is we need to take the account number 15, and post it in the and place it in the post reference column of the journal. The reason we do this is to let anyone reading the journal know that the $2,400 debit has been posted. So if we see this 15 in the post reference column next to the debit, we know it's been posted, so don't go and post it again. So our next step is to take the $2,400 credit and post it to the cash account. So on this slide, I've got the cash account at the bottom of the slide. And remember, this cash account is just a picture of part of the ledger. And notice we had a previous balance of $5,900 in cash. So the first thing we need to do, besides making sure that we're looking at the right account in the ledger, is we need to take the date and post the date into the ledger for the cash account. Now this is important. Notice that we are not skipping a line in the ledger. On the journal, in between journal transactions, we do skip a line to make everything easy to read. However, in the ledger, we don't do that. So our next step is we're going to take the $2,400 credit for cash and put it in the credit column for cash. The next thing we need to do is to calculate our new balance. So prior to this $2,400 credit, what was the cash balance? It was $5,900. So we had $5,900 before, and now we're crediting the account $2,400. So if we credit cash, is it going up or is it going down? Well, it's going down. So we need to subtract the $2,400 from the $5,900. And so what's our new balance for cash? It's $3,500. Our next step is to take page 2 from the journal and put it in the post reference column so we know where this $2,400 credit came from. The J stands for journal, the 2 means page 2. And the last thing we need to do is take the account number 11 and post it in the post reference column of the journal so that we know that that $2,400 credit has been posted to account number 11 in the ledger. So when we get to the project, we will have to post all of our journal transactions to the ledger using this method. So if your boss comes to you and says, how much cash do we have? What are you going to tell her? We currently have $3,500 of cash.